Well, greetings, my beloved clients and friends. So today is November 11th, Friday, Veterans Day. Just want to recognize and thank all you veterans out there. So it was an interesting week. We said it would be, and we had elections on Tuesday, and we had the CPI print come out on Thursday. And we said that the market would have preferred some gridlock, meaning, the House, the Senate, and the White House be divided among the parties. And it's not certain yet. There was an expectation of a red wave that didn't really materialize as many had hoped. And but it looks like the House is going to go to the Republicans, so which would bring some gridlock. The market was not ecstatic and not completely brokenhearted. But more importantly, on Thursday, the CPI print for October came out, and it wasn't as bad as expected, and the market had a very strong favorable reaction to that. So they were expecting inflation to come out hotter, and so year over year was up 7.7%. Month over month it was up 0.4%, and they were expecting like month over month 0.5. And although that's better than expected, it's not that good. I kind of feel like they overreacted. I mean, 0.4 month over month is 4.8 year over year, which is still much higher than what Powell wants it to be, which is like 2%, right? And so we need to see month over month changes in the 0.2, at most 0.1, 0, minus 0.1, minus 0.2 would kind of show that this inflation is coming down. 0.4 is not that good, and yet the market was just super excited about that. So I don't know. Could we breathe a sigh of relief and say it's finally over? I'm not sure yet. And when I listen, because all day long in my office the investment news is on, and when I listen to the people, I hear a lot of hope and optimism. And I've said this before, that the people on the stock side tend to be very optimistic, and the reason that is because stocks are the risk is asymmetric. If you invest $10 in a stock, the most you can lose is 10. It could go down to 0, which is 100% loss, but the most you could lose is 10. But the most you can make is more than 10. It could go to 20, it could go to 30, it could go to 100, it could go to 1,000, it could keep going, right? So they tend to be, people on the stock side tend to be optimistic, and they hopeful and to look for the best and be always on the lookout for signs of anything positive. Now on the bond side, it's much different. A bond investor, they're looking at a bond and they might get 4%, 8%. They buy it at a discount, maybe a little bit higher. If they're on the aggressive side and they buy it at a discount and things work out, they can make 16, 20%. That would be amazing for a bond investor. But the downside is they don't get any of their money back. It's minus 100. So their bond investing is skewed the other way. There's a small upside and a big downside. So bond investors tend to be pessimistic. They tend to ask themselves, what can go wrong? And they tend to be looking that way. So, I mean, it's kind of known that the real smart guys are on the bond side. But they're not necessarily the funnest to be around, and they don't get as much airtime on the news channels. So which is funny because you watch regular news and it's all bad news. If you watch, investing news, they try to only show the good news. But anyways, so I think it's smart to look at things from a realistic way, not overly optimistic and not overly pessimistic. And I'm reminded of when I was a kid. I used to like bowling, and I was in a bowling league. And every Saturday, my coach would pick me up, and we'd go bowling. And as a kid, Friday night, I'm thinking, man, today's the day. Today's the day I roll my first 300 game. 12 strikes in a row. I could do it. And I've bowled strikes before, and I've put a couple together, 2, 3, and all I need to do is 12 in a row. And in theory it's possible. Other people have done it, and I've bowled strikes before, so you think, hey, that's possible, right? And so start the game, and maybe the first frame I pick up 9 pins, and like, okay, I can still get a 279, and you always have that hope, and that hope keeps getting adjusted down to reality. And that's kind of the way the stock guys think. They think, okay, it's been a rough year, and in November, Powell said he was going to start tightening, but what if he just doesn't have to tighten that much? They're thinking, okay, it's not going to be a 300, but maybe it's going to be a 279. And then the war in Ukraine started in February, and there was hope like maybe it resolves itself pretty quickly, and that didn't happen. And and the expectations for how much Powell was going to raise, reluctantly went up, and you're staring into a recession, and let's just not talk about it, and let's hope that he orchestrates a perfect landing. And they're like that little kid that me, right, who's like, yeah, maybe I could bowl a 279. I'll get 11 strikes in a row, or 10 or 9. Okay, that wasn't a perfect frame, but I could still be perfect from here on out. And that's how the stock market guys are, and they keep hoping, like, that. I don't see how they saw as much hope as they did in that October read. It wasn't that good. And okay, so Powell's he could still orchestrate a soft landing, if he does it perfect, right? If Powell strikes out from here, it throws all strikes. Okay, true, but look at his track record. He's broadly criticized for being too slow to start this thing, and waiting too long. But on the other end, he's going to execute perfectly. It's possible, but I don't think it's as likely as the market gives it credit for, And so, on the other hand, a bond investor, if he was a bowler, he'd start out saying, I'm gonna bowl 0 this game. It's possible that I roll 20 gutter balls in a row, and at the first frame, he gets 9 pins, and he said, well, at least I know I'm gonna get 9 if I do 18 more gutter balls from here on out. And that's how a bond guy would think, right? So, but in reality, I was my average was like in the 150s, 160s, and usually I ended up being around there at the end of the game. I didn't throw all strikes, and I didn't throw all gutter balls, And so the reality is probably going to be somewhere in between. And so I just want to talk about what are the potential gutter balls out there, and what are the potential strikes, and figure that the reality is going to be somewhere in between, so that when we hear bad news, we don't say, oh, I'm going all to cash, and when we hear good news, we say, okay, I'm going to go all to stocks, and be whipped around by every wind of every gutter ball and every strike. So yeah, there's still some things that could go wrong. I think China is a potential for things to go wrong on many levels. One, that zero COVID that they announced this morning that they're going to lighten up a little bit, but that's been a real strain, and they don't allow really foreign business in right now. Well, if you want to go, you have to quarantine for 10 days. They're dropping it by 2, so it's really impeding business. They also have a commercial real estate problem on their hands, similar to what we had in 2007 and 8. Evergrande is way over leveraged, and they're going to have to figure out how to work that out. Not only Evergrande, but other companies. I have a friend that lives in China, and I asked, so what do you think about Taiwan? What do you think is going to happen there? And very extremely matter-of-factly, she's like, oh yeah, they're coming back. They're coming back into the fold. We'll fold them back in. Like it was, and it's not a person that is, pro China or pro communism or pro anything, or doesn't really have a horse in the race, but just knows what it's like living in China, and so the West talks about it, but still really, I don't think has grasped that could happen, and it could happen sooner rather than later, right? So Xi Jinping got 5 more years at this most recent, this 20th Congress, and he installed his leadership team that was not super West friendly, so that's kind of a potential powder keg, if you will. And then the result of Powell raising rates is his stated intention is pain. I mean, he's been very clear, and the market gets hopeful every time before he's going to speak, and every time since June he's been disappointing. He's like, no, I'm serious. Pain. I am going to, even if I have to break something, I'm going to stop this inflation. He's not balancing his concerns with inflation and recession. His number one priority is inflation, and the only thing he could do, the only tool he has, is demand destruction. If he had other tools, maybe he could have another approach, but that's the only tool he had. And so that gives me pause. So the tech companies are announcing massive layoffs, and not really that massive, 10, 15, 20% layoffs. They could be much more massive, and these are good paying jobs, and there are some areas that are tech heavy, like San Francisco, Austin, Salt Lake City, Raleigh, Durham. What happens when they start getting some pretty big layoffs? I'm not saying all these things are gonna happen, but there are potentials that need to be priced in, and some of them are to the degree priced in. The interest rates going up as high as they are has really put a slowdown on real estate, housing. Not only housing, but commercial real estate too. They don't want to do deals when rates are as high as they are, and construction industry is going to be impacted by a slowdown in there, and they employ a lot of people. Those are very real concerns, right? But there's a lot of also exciting things on the horizon, right? You can't just look at what if I throw gutter balls from here on out? What if I throw strikes from here on out? But in reality, somewhere in the middle. So what are the potential strikes? On the horizon, things like energy, labor, transportation, huge problems and huge limitations are gonna be solved by technology. And add to that, healthcare. A lot of healthcare problems are gonna be solved by technology, and it's gonna happen within a reasonable time. solar, wind, and battery is cheaper, and it's going to bring the cost of energy down. You know, autonomous driving with electric vehicles is going to solve the transportation problem. It's going to be bring the cost of mobility way down. You know, humanoid robots are going to solve the labor problem, and those things are going to create massive amounts of wealth, and it's going to happen before you know it. And it's going to, you know, they're going to be huge capital creators. Interestingly, Tesla's in the center of a lot of those things, and they're also in the center of a lot of mess right now with Twitter and their stocks down over 50% from their highs. But there's a lot of promising things on the horizon. Imagine if America had cheap labor again, and we didn't have to go to China or Mexico or the Philippines or places like that. We had it domestically in the form of you know, humanoid robots and stuff like that. Wow. We could make stuff cheap and we didn't have to depend on China. Man, that's super exciting. So, are we going to bull all strikes from here on out? No. Are we going to bull all gutter balls from here on out? No. We just got to navigate through the difficult things and see how those exciting things develop and try to pick winners and stay the course. So, I don't want to get overly greedy or overly fearful, overly optimistic or overly pessimistic. I don't want to jump up and down because one day we were up 7%. At the same token, I don't want to, you know, hang up the gloves because we had a couple bad quarters. So we're going to get through this. There's always going to be good news and there's always going to be bad news, but in the end, I think the trajectory over the long term has been and will be upward and to the right. Okay, so be of good courage. Know that those veterans fought for something worthwhile, and it's going to continue to be a land of opportunity. Thank you to you veterans. Hope you guys have a great weekend.